Happy or not so happy Bank of Canada announcement day. I'm Tyler Wilson from Pilot Mortgage Group, and I'm going to break down the announcement today, what it means for you, your mortgage, and the Canadian economic space moving forward. Let's get into it. Today, the Bank of Canada announced that they will be holding the overnight rate at 2.75%. What that means for you as a Canadian with a mortgage or a variable rate mortgage is that your prime rate will remain at 4.95%. If you have a fixed rate mortgage, this information does not directly apply to you and your mortgage at this point in time. But if you're shopping for a mortgage, what it means is that we could see an impact on the bond market moving forward. You'll have to keep your eye on that to see what's going to happen with interest rates moving forward. When we take a look at this announcement, it came as a disappointment to many Canadians amongst concerns that with the tariff war, we should see slower economic growth. We've also seen good inflation prints recently and growing unemployment. So the majority of Canadians did expect that the Bank of Canada would cut rates today, but for many industry insiders, the expectation is that the Bank of Canada would be holding. Let me tell you why. When we look at Canada at the moment, there is major uncertainty given what our economic future is going to look like. This was highlighted by the Bank of Canada this morning in their announcement.
As U.S. tariffs permanently reduce Canada's potential output and lower our standard of living. Inflation rises above 3% in mid-2026 as tariffs, countermeasures, and supply chain disruptions raise costs, pushing up many prices. Inflation then eases as weak demand limits ongoing inflationary pressures.
Two major opportunities in Canada coming up here inside of the next month that are going to be very impactful as far as our economy moving through the remainder of 2025 and into 2026. The biggest one, we have a Canadian election here inside of the next 2 weeks that is going to drastically change our political landscape and opportunity to negotiate with Donald Trump.
We had a very good conversation. Mark called me today at 10 o'clock. We put out a statement. We had a very, very good talk. He's going through an election now, and we'll see what happens.
Whether we see Mark Carney and the Liberals continue on, or we have Pierre Poilievre and the Conservatives come in and try and bring sweeping change to our economy and our political landscape, we'll have to wait and see. Each of these individuals is going to get the first kick at the can to properly negotiate with Donald Trump regarding the tariffs. Mark Carney had a great meeting with him several weeks ago, according to both of those individuals, but they did decide that there's going to be no negotiations until we have our new Prime Minister in Canada. This is very important because when we recently had, over the last week, a pause on the tariffs, Canada was not included in that pause. We still have our tariffs in place that are not protected under USMCA, and that's not a great thing for the Canadian economy, specific sectors as well, not good either.
I mean, to be blunt, look, some exporters could go bankrupt. That could spill through the economy. Unemployment could rise more. Households' spending could retrench more. So that is a risk. There's a reason that we have two scenarios. I mean, that is certainly a very bad outcome. There are also scenarios where this trade war ends relatively quickly.
So when we take a look at where do we go from here, what are we hoping, and what are the two different scenarios that the Bank of Canada is looking at that could play out and how it impacts the economy? The first one is ideally we're able to have our new Canadian government come in, sit down with Donald Trump, and have a conversation about what we should be doing with trade policy between the United States and Canada moving forward. The ideal situation here is that we're able to remove all of the tariffs, probably going to have to open up USMCA early, renegotiate that, and hopefully that new trade deal is good for Canada. The other option is that the tariffs are reduced significantly and we're able to continue on throughout the remainder of the year. That would be ideal. The expectation, should this play out, is that we should see probably further rate cuts throughout the remainder of the year. Probably 50 basis points are what the majority of Canadian economists are calling for. Again, that would bring our prime rate on our mortgages from 4.95 down to 4.45%. Not so bad. The other option that we could potentially see is that these tariffs and the trade war are ongoing and prolonged. This is not a great scenario for Canada as well as mortgage holders. When we take a look at how that plays out, you have to remember that tariffs are inflationary by nature. What those tariffs do is they are going to slowly increase our inflation should they remain in place. The expectation from the Bank of Canada is that inflation could get all the way back to 3% should these remain in place. At the same time, we're very likely to see the Canadian economy fall into a technical recession. This is going to create the perfect storm for something that economists call stagflation. Stagflation is a big fancy buzzword. Basically what it means is that we have slower economic growth in Canada, more job loss, lower wages, but at the same time we have inflation, higher prices of goods and services, and that's brought on by the tariffs specifically. This puts the Bank of Canada in a very difficult position where they are unable to cut interest rates to help stimulate the economy because that would further drive inflation. So everybody cross your fingers. We're hoping that that is not what we're going to see, regardless of who we have come into office here in Canada. Let's hope for good trade negotiations with our good friend Donald Trump down on the border. He is wildly unpredictable. No idea how that plays out. We do know that trade with Canada is very key to the United States, and it is likely that we will see some form of an agreement moving forward. So what does that mean for you, your variable rate mortgage? Tyler, should I be locking this thing in? What does that look like for me? We're now seeing interest rates that are in the low 4s, high 3% range. And yes, while there could potentially be further rate cuts, and if you have a great discounted variable, you may choose to wait those out and see what happens. There's certainly nothing wrong with choosing to get off of the rate roller coaster and locking that mortgage in today, should you be able to get something that is close to 4%. When we take a look at the average 5-year fixed rate in Canada over the last 20 years, if you could get a rate that was in the high 3s, you'd be doing technically very good, should you be able to do that. So if you're tired of the rate roller coaster, nothing wrong getting off, feel free to reach out to us. We're happy to take a look at what your options might look like. The other opportunities in the market for Canadians, something that we should certainly look at. The housing market has been all over the place. There are doom and gloom headlines, certainly record amounts of inventory this year, lower amounts of sales that we're seeing. And a lot of this has been brought on. We're supposed to be seeing some kind of resurgence with the lower rates in the market, but with the tariff war, the political space at the moment, the market has kind of been put on pause. This has created a great opportunity for anybody that is potentially looking to either get into the market as a first-time buyer. Things are moving a little bit slower. You have the opportunity to look at more property, ask all the questions that you need and not be in a rush. The other opportunity as well is for people moving up the property ladder as well. There have been some good options to find property at a discounted price that allows you to get into a slightly larger home with interest rates coming down. Things are also a little bit more affordable. So those would be your opportunities on the buying side at the moment. When we take a look at Canadian mortgage holders, if you're holding a mortgage at this point in time, you could be saving thousands of dollars if you have interest rates that are in the high 4 to 5 to 6% range, had to do something with your mortgage or purchase a property in the last couple of years. Here at Pilot, we have been refinancing our clients steadily over the last couple of months. We have saved many clients thousands of dollars, helped them lower their payments, consolidate any debt that they have. Now is a good time to be looking at that. If you have any questions, concerns, you'd like us to take a look at your mortgage for you, or want more information regarding these Bank of Canada and economic updates, please feel free to check us out below, sign up for our newsletter. We'd love to have you follow along with us. I'm Tyler Wilson. Thanks again for your time. Talk to you soon.